All right, so welcome and thanks for joining me. Today we are going to do some quick videos. So I'm just going to do some quick live sessions, but we're just going to kind of rifle some things. And I'm going to go into building Netflix vertical spreads. I've already talked a little bit about Netflix in the earlier live stream, so I'm just going to show you how we can continue to kind of build into these spreads and so forth. So that's something to kind of consider as you're starting to build out positions. But you want to be a little more careful on a stock, especially that dips quite a bit. So we're going to take a look at it, and I'll just give you some personal thoughts and takes on it. And again, you could use it in other strategies and stocks that do kind of a similar kind of concept. So here, as we take a look at Netflix, this stock has tanked quite a bit. And you can see by the technicals right here, we're kind of coming down to about 400 or so. 376 actually, and we're getting into about 2018, 2019 levels. So we're coming into some significant levels. And if you're like saying, hey, I want to buy the dip, then in that case, you're starting to look at some possible vertical spreads. You could be diagonal spreads. You could do a lot of different things. But I want you to start thinking about not just, hey, layering a trade like in one spot. Like start looking at it like a box, and then you have like different elements to your box. Like you have these corners and you got a couple different spots. Then start layering into it, and then build out kind of more like a cube, right? So different elements into it. And that's what we want to start thinking in this case. So I already have a tiny bit of a position here on this butterfly and vertical. I put it on earlier. And right now the spreads are just kind of isolating and playing around. So you can see it's just basically the whipsaw effect you'll see in pricing. This one's down about $27 or so. And this one is kind of a weird move down here. And people get freaked out with this. And I want to show you this because they get so freaked out that, look, the most I can lose is 125, but I am down 174. And that's exactly what I want to show you this video concept is that you'll see that sometimes options are mispriced. And in this case, it's mispriced because think about it. How can I lose 175 if I sell it right now, but at expiration, I'm going to actually lose only 125. So what's important is you kind of look at these things and just kind of say, okay, if they're being mispriced, it's actually not a bad time to go in and put on more positions, right? Because now you can sell it way more. And obviously, once you start coming in, they'll see that. And in a live account, they won't actually fill you in that way. So they'll quickly adjust the pricing. So as we look to build out this trade, I already got a couple stuff going. But what you could start doing is you want to do this across multiple days. So let's say we've got our calendar here, and we got our Monday, Wednesday, Friday, maybe. And what we're trying to do is put on a few positions here, a few positions here, maybe another few positions here across like a 2-week time span. And that then makes a lot more sense. And I'm doing it on different durations. So I already have some stuff in the 37 days. So that means, boom, I'm done with the 37. Why don't I go to the 51? I don't want to trade anymore on the 37. And that helps spread the risk a little bit. And again, this would be done across a couple of days or a couple of weeks. So I could go somewhere around this 20 delta, 25, just to spread that risk around, spreading the capital. You're just sprinkling it on, spraying it like a paint sprayer. Different spots, different zones, different situations. And it just isolates and spreads that risk around. So here we can go in, and now what you can see is I'm risking about, here I'm trying to make 217 at expiration, and I'm, if this pulls back to kind of the break even, I'm risking about that same amount. So I could even try to nibble at 220, and then you just see, hey, let me try and get in on that one, and then we'll see if it gets filled. So there we go. You can see you can go even a little bit extra and it could still maybe fill you. So there we go. That one filled great, or even better. So it's up like already $20, which again is not realistic from a standpoint of the market is moving so quickly with these spreads that it's not as real. So you have to wait till things calm down for it to be more realistic. Like now you can see it's calmed down, and now my butterfly is down $15. So I'd say that's more real. Then what we're looking at right here is this vertical that I put on also earlier. So $24 positive there for the day. So you can see now I've got like this spread here that looks really weird, but in total, all I'm looking at is about a 9 delta, which is almost like 9 shares. I got a theta of about 3, short Vega, and there's your P&L. Now, you can also look at this from a different array standpoint, from expirations, and you kind of look at it like this. But a better way is also to look at maybe the day step, and you can kind of see the way that position is going to work and behave. So looking at it like this, that's kind of what I'm looking at. Those are my risks right there. So, you know, if I start building out a little bit more of this position, I'll say, look, I like it. I like it. So what else can I do? Well, I've got already a butterfly. I got some verticals. That's pretty good. Well, I could keep things really simple and just keep doing some more verticals at different areas. So maybe let's say 3-4 days would go by, maybe another week would go by, then I'll throw some more stuff. Now, because this is a paper account and because I'm just trying to make a video, I don't want to combine this video within 2 through 3 weeks. Then what I'm going to do is I'm just going to put it on right now, which I use for a lot of my coaching and mentoring students. So if you do want to do a coaching session with me ever, feel free to reach out and go to TRADERSFLY, and then you can book a session. All right. So here's maybe another one at 3:30, 3:20. And then here we can change these expirations. So you can see I'm starting to spread my risk a little here, a little here, a little here. Ideally, if this kept moving down, then I would do the selling the vertical, and that way I'm spread more. But right now I'm concentrating everything too much in this area. If I could spread it across more expirations, that would be good, or strikes. But I just can't, because I'm doing it all in one day, right? If this moved up, here's the other thing. If this moved up, then I'd probably have a position here and some here. So then I'd be spread across different areas. So anyway, so then let's see. Let's try and get like about 117. Let's see if we can get one of those and start building that out. And I'm just spreading that risk and capital, and you let it sit, right? And then you wait 5 minutes. You can go to 115. They're trading at 112, they say, but sometimes you can get better fill rates. Hey, good afternoon, Kevin. And then you let that sit and see if you can get filled on it. And that's the way you could trade Netflix with some vertical spreads. It's just spreading out your capital. You can do this on any position you like. Let this kind of sit and let it work, and start building it out, right? It's not about putting one big trade on. Like if you ever see anybody putting on like one big large 20 lot size, they don't get the concept of spreading your risk out. Doesn't it make more sense to sell SPY on a regular basis? Sell SPY on a regular basis. What do you mean by sell SPY on a regular basis, Rustam? Can you be more specific? Aloha from Hawaii. Yeah. Okay. Wonderful hotspot. Yeah. Thanks. Yeah, so I'll answer a couple of these questions. If you want to be more specific, Rustam, then we can take a look. But you can sell SPY. But if you're talking about selling calls, or you're selling just in general, sell SPY options, you can. There's nothing wrong with selling SPY options. You can sell puts. Exactly. There you go. I got filled. Yeah, you can sell SPY options. If you're talking about puts or calls, you got to be specific on what you're asking here. Yeah, you could sell SPY options, but again, we're spreading our risk. Yeah, selling puts. Yeah, absolutely. You can do that. And I have, like, if you look at my SPY, you talk about SPY puts. Look at that. I've been selling and buying and everything. Here's my SPY. Yeah, you could do it on the SPY, but this video, we're talking about Netflix. So, but yeah, you could do a bunch of stuff in the SPYs, of course. So in fact, like right now, if I go into the SPY, I could go in and put some more trades on that as well, just to spread the risk, because you're trying to allocate things all over the place, right? Diversify that risk. Let's go to about 114 days. What do I have? More puts? I don't have more puts in there. Let's go about 410 and a 405. And I'll try to bump it up to about $110. Do another contract, spreading that risk. Boom, popping it in. Could you show a diagonal on Netflix? Yeah, you could do a diagonal on Netflix. Let's add another little tiny diagonal to spread that risk. Here, I've got these positions going. Diagonal right now, there's a little bit tricky on doing a diagonal on Netflix, and I'll tell you why. Because if you look at the volatility, we are high. So for me, doing a volatility trade, positive Vega on Netflix is a little more complex. So if you do, I'd probably go shorter duration. That's one thing. Number two, I need to make it much more bullish to offset for the Vega. So we'll do something like this. I'll just show you the simple example here. So we'll go, let's start right here. Okay, so let's first start with a calendar right here. And if we start with a calendar, you can see I got a huge vega on this position. Okay, almost a 2 times versus my theta, and that's where the problem lies. I got a little positive delta to offset that vega. Hey, look at that. That's pretty cool, right? He's got ears and everything. Anyway, so I've got some to offset it. The problem is this can drop, this line. So we want to be careful. So this is where we start rotating this a little more. And I've got myself a diagonal. So this is how, if you're cautious, you start this way. If you're really cautious, you start bringing this back a little more and a little bit more. But the problem with this is now you don't have enough runway for the volatility. So that's why you make it a little more bullish. That's why I would do a little more bullish of a diagonal here and do something a little more like this, because I've got such a bigger vega for this to come back. And as I start layering these other ones here, remember they're like all the way over here. And if you look at these spreads now, like you can see my whole smorgasbord of stuff. I got some positions here. My diagonal is over here. My butterfly is over here. So here's my core on my verticals. Here's my diagonal. And yeah, so I'm spreading some stuff out all over the place. I'll try to pay less on the diagonal. I could even do an even more shorter duration, but you got to be a little careful, because I do want, you know, a little sun protection. Positive vega would be good on this kind of market. But remember, if it snaps down, again, you're spreading this out over a week or two. This isn't like I wouldn't do it all in one day, but this is the concept, is I need some positiveness. If you're careful, you could do like a calendar, but you got positive vega, so you almost need like an out of the money calendar to some level, something like that, because you got such a big vega problem. You got to offset it. So anyway, let's go for 380, 385 maybe. Right here, something. No, I did one right here. There we go. So I got a little bit there on the outside range, and that's fine. You know, something simple like that. And that's it. Let's not pay up too much. Let's see if we can get that one. And then we'll do, okay, pop that in, and there you go. That's how that trade could be done. Boom, done. And now you're allocating all over the place on these spreads. That's probably too good of a fill for a live account. Normally I wouldn't see that kind of profit right away. So just understand that. But here we go. There it is. There's the positions, and you're basically, you know, about 18 shares long in theory. In this case, it's 18 deltas. I know engineers and technical people say it's a delta, it's not shares, but to relate to it, it's really 18 shares, right? Kind of. So you bought 18 shares, you got about $7 a day you're making with a short vega of about 5, which the diagonal kind of helps out. So anyway, now I got a smorgasbord of positions. Not any one position will kill me, and I'm spreading my risk. I didn't put it all in one day kind of thing. If I was to spread this across 2 weeks, that's what you're really looking to do. So anyway, I hope that helps, and give you some thoughts on Netflix. I might hop on some other times here. I'm just doing a few quick videos in between some of these announcements and as I watch the market. So enjoy the day, and I will see you guys